Hey Apes, what's up? It's K-Ape, here with today's market wrap-up. The New York stock market saw a powerful rally led by tech stocks. It was driven by major tailwinds, such as cooling inflation and Micron's strong earnings. However, investors should remain cautious. Statistical uncertainties and record-breaking option expiries loom as significant variables. Let's take a closer look at today's market. 1. CPI-driven rally, but the statistical trap. November's CPI came in lower than expected. It acted as a catalyst for the market rally. Headline CPI hit 2.7%. That boosted hopes for rate cuts. Combined with Micron's strong earnings, this fueled a major surge in the semiconductor sector. However, the reliability of these stats is under fire. Due to the government shutdown, October data was missing. The Fed's unofficial mouthpiece, Nick Timiraos, have criticized this. They called it a distorted reflection of reality. Looking ahead, candidates for the next Fed chair are offering fresh perspectives. Governor Christopher Waller is calling for a new approach to rate decisions. He pointed out the falling reliability of current data. He argued that the Fed must move beyond simply being data-dependent. Waller proposed 3 core macro arguments. First, factoring in productivity shifts and labor displacement from AI. Second, a deeper study of the neutral rate to stabilize the economy. And third, making rate decisions based on what best serves national interests. This suggests that under new leadership, the Fed may adopt much bolder and more innovative strategies. We should also look at Chicago Fed President Austin Goolsbee. He actually voted against a rate cut at the December FOMC meeting. Goolsbee, who famously calls himself a data dog rather than a hawk or a dove, found many positives in the latest report. He added that if the disinflationary trend continues, more rate cuts could be on the table for next year. Second, Tesla's California sales suspension stayed. Tesla faced a license suspension in California over its autopilot and FSD marketing, but it has managed to avoid an immediate crisis. The DMV issued a 30-day suspension. They stayed the order for 90 days due to economic concerns. This gives Tesla time to adjust its marketing. It avoids a total sales halt. Third, Oracle finalizes TikTok acquisition. The long-running TikTok ban saga has ended. An Oracle-led consortium agreed to acquire over 80% of TikTok's US business. By storing all user data on its cloud and monitoring source codes, Oracle has addressed national security concerns. This move provides Oracle with a massive cloud client. It gives a significant boost in market share. Following the news of the TikTok acquisition, Oracle's shares jumped over 5% in after-hours trading. 4. OpenAI's valuation soars. The value of OpenAI continues to skyrocket. According to the Wall Street Journal, additional funding has pushed its valuation to nearly $830 billion. This is far exceeding initial estimates. With interest from various sovereign wealth funds, we are seeing a massive concentration of global capital in AI technology. 5. Peak volatility, quadruple witching day. Despite the rally, December 19th is quadruple witching day. The total value of expiring options and futures is roughly $7.1 trillion. That's nearly 10% of the Russell 3000's total market cap. With extreme volatility expected toward the closing bell, all eyes are on whether the S&P 500 can hold the 6,800 level to sustain the Santa Claus rally. US opens tonight. I think I'm jumping in on something. All my live trades go up around 8 to 9 a.m. Eastern in the community tab. That's it for today. Hit that like button, subscribe if you haven't, and I'll be back soon. Stay strong out there. K-Ape out. Thanks.